We think it's an excellent time to invest in high-quality corporate bonds, and a lot of this is basically because of the strength of the private sector. The consumer and businesses are doing quite well. The economy's proven to be very resilient. Most importantly, there's catalysts for lower yields ahead. We think that growth has peaked, and we're going to start to see a slowdown in growth. Not a recession necessarily, but clearly a slowdown, and also inflation is clearly coming down. So with that, we should see over the next 1 to 2 years lower yields. At the same time, we think investors can earn near equity returns by investing in bonds today. These yields are basically at 15, 16-year highs. If you look at both nominal and real yields, we haven't seen these yields in 15 years. So this is an excellent time for investors to own high-quality bonds, benefit from potential price appreciation as those yields go lower, and also invest in very high quality companies where the fundamentals are very strong.
Yeah, when you look at the high yield index as an example, this composition of the index has really improved the last number of years. And though even last year we saw a lot of rising star activity, where the index stands today, 50% is BB rated, a third of the index is secured. And as Mark mentioned, the underlying borrowers themselves are performing quite well from a fundamental perspective. Given that we're in the late cycle dynamics potentially this year, we think that they have a lot of downside protection being offered at yield levels that we're seeing today.
So we're super excited about the global opportunities in corporate bonds, bank loans, and high yield around the world and in emerging markets. There are companies that we can invest in today with huge barriers to entry, very high profit margins, and secular tailwinds and growth. When you look at the U.S. economy, the strength really is the consumer. And while goods spending is slowly decelerating, the service spending is still incredibly strong. In addition, guess what? The business traveler's back. So if you look at companies like airlines, hotels, gaming, those margins are expanding. And finally, if you look at the banking industry, there's many opportunities around the world to own high quality banks that are highly profitable, very high capital ratios. This is a pure play on the strength of the economy. And again, with the economy being so resilient, we find many opportunities in banks and financials around the world.
Yeah, I think when you think about these sectors, they are benefiting from the tailwinds that Mark mentioned earlier. And with our bottom-up credit selection, we already have identified these as potential rising star candidates in the sectors such as gaming and cruise lines. And our credit analysts have already rated these credits, investment grade effectively, and the rating agencies are just now catching up. And that really leads to a lot of spread compression and alpha generation. And it's just one example of where our active management is kind of ahead of the agencies and generating that alpha that we are always striving for.